Good morning again from New York City, just returned from Singapore. I wanted to talk about the core of banking. What is at the core of banking? And a little bit about perhaps about blockchain. Fintech is threatening to change a lot of what goes on around transaction processing in banking processes, particularly blockchain. It might change a lot of those things, but at the core of banking is the process of matching illiquid loans against liquid deposits. That's really what the heart of banking is. You begin the process by making a loan to set up a bank. A loan is where the process begins. Then you have to gather deposits in order to make the loan, but the deposits are always callable by a person. They're usually very liquid, but the loan has a fixed liquidity to it because people don't take loans unless they know how often they're going to have to make payments, and so it's fixed in a sense. That process of measuring or matching illiquid loans against liquid deposits is not something that happens in the loan system, and it's not something that happens in the deposit system. It's not something that happens in any one of the core banking systems. That process happens at the core of the bank, where all of those things come together. Well, what's at the core of the bank? Well, it's the finance, risk, ALM, all of liquidity analysis, all of those kinds of things, the treasury processes, all of those things. They're low cost. We try to drive them down in terms of cost, but they're really at the core of managing and controlling that whole process. That issue points to where the fintech revolution won't change that basic dynamic in banking, that we have to be able to control and measure those kinds of things in order to continue to have banking, in order to be able to provide the service that customers require. That's at the core of what we're trying to track here with a metric engine and with an instrument ledger.